To keep yourself updated, subscribe to IndigoLearn and click the bell icon and download our app OneFin to start learning on the go.
Hello friends, welcome to this discussion and review of May 2022 Costing Inter paper. Now at the outset, what I would like to say here is it's a beautiful question paper. It's all concept based, and I'm glad that these are based on the concepts which we have discussed in the in all our recordings that we have done. Now, one thing which I would like to mention here is, see, this is a question paper where they have done a lot of cut and paste and pick and choose. So maybe they have taken two separate questions, taken one aspect from one question, taken a concept from the second question, merged both of them and given us a new set of question paper. But then having said that, these questions are really short, they are simple, and these are straightforward concepts which they have asked in the question paper. So I have not seen a single question which is something which we have not already covered, or something which is out of the box totally. So these are straightforward. And one more very important thing which I have noticed is this question paper is not lengthy. So generally the costing question papers and what we see are lengthy. I mean, the questions that they give for 5 marks are practically questions of 10 marks. And, maybe a 10-mark question paper is something which really requires a lot of time. But this time around, the questions are not so lengthy. These are very simple, straightforward. And these are, if you know the concept, go answer them. Otherwise, you will not be able to answer. So let's look at the questions that were asked in the exam. So this is our May 2022 question paper. Let's look at the first compulsory question. A Limited is a toy company. A Limited, a toy company, purchases its requirements of raw material from S Limited at rupees 120 per kg. The company incurs a handling cost of rupees 400 plus freight of rupees 350 per order. The incremental carrying cost of raw material is 0.25 per kg per month. In addition, the cost of working capital finance on investment in inventory of raw material is rupees 15 per kg per annum. The annual production requirement of toys is 60,000 units, and 5 units of toys are obtained from 1 kg of raw material. So they have given us some relationship between the input and the output number of units. Now let's look at the requirement. Required, calculate the economic order quantity of raw materials. So they want us to compute EOQ. Now the concept of EOQ is very simple and straightforward. It is 2AO by C, under root 2AO by C, where A is the annual demand, O is the ordering cost per order, and C is the carrying cost per unit per year. Now here there are a couple of things that we need to be careful about. See, one, they are asking us to calculate the EOQ of raw material. And in the question, if you carefully see, they have given the annual production requirement of toys as 60,000 units. So first we have to convert the requirement of 60,000 units in terms of raw material. Now they further say that 5 units of toy are obtained from 1 kg of raw material. So 60,000 by 5, if we do, we will get the annual requirement or the annual consumption required of raw material, which we are going to use in our formula. So that is the one part of under root 2AO by C. Ordering cost, they have given it as incurs a handling cost of 400 plus freight of 350 per order. So you can say 750 is the ordering cost every time we place an order. And then they are saying the carrying cost is 0.25 per kg per month. So this we have to first convert into 12-month annual by multiplying it by 12. And then we also have to take the carrying cost as rupees 15 per kg per annum. So we will have the incremental carrying cost plus the capital finance cost. That 15 rupees per kg per annum we need to add. That will be a cost. So if we take that number, we will easily be able to calculate the EOQ. So I would say very simple, straightforward. Then they are saying advise how frequently company should order to minimize its procurement cost. Assume 360 days in a year. See, once you compute the EOQ, whatever the economic order quantity we have got, it means what? It means the size of the order that we are going to place every time. So you take the annual requirement divided by the EOQ, you are going to get the number of orders that you are going to place. And once you divide the number of orders, once you divide 360 days by the number of orders, you will get the frequency. So this is also a simple, straightforward requirement. Then they are saying calculate the total ordering cost and total inventory carrying cost per annum as per the EOQ. See, at EOQ, the inventory carrying cost and the ordering cost is going to be the minimum, and it is going to be equal. So it's a simple, straightforward question based on EOQ. I don't see any complications here. Let's look at the next question. PQR Limited has replaced 72 workers during the quarter ended 31st March 22. The labor rates for the quarter are as follows. Flux method 16%, replacement method 8%, separation method 5%. So instead of asking us to calculate these percentages, here they have given us the percentages. Now I am assuming that they'll be asking us to find out the basic figures. Let's look at the requirement. You are required to ascertain the average number of workers on roll for the quarter. How do we find this out? Sir, we have two pieces of information. They have given the number of employees who have been replaced, and they have given us the labor rate based on the replacement method. How do we compute the replacement method rate? Is the number of workers replaced by the average number of workers employed into 100. So if we use that and if we back calculate, so if we basically do, compare 72 with 8%, we will get the average number of employees who are, available on roll. So 72% represents 8%. How much is the average? That is a straightforward requirement that we'll be able to compute. Then next, they want us to find out the number of workers left and discharged during the quarter. So we know the average number of workers on roll. We know what is the turnover labor rate based on the separation method. So we will be able to easily find out how many workers have separated, how many workers have left and discharged during the quarter. Separation method is basically number of workers left and discharged divided by average number of workers into 100. So we know the average number of workers, we know the percentage that we have got the labor rate, find out the missing figure. So this also is simple. And then the third requirement, number of workers recruited and joined during the quarter. So you use the flux method and find out what is the number of employees that are workers recruited and joined during the quarter. So this is a question which is basically based on missing numbers. And lastly, equivalent turnover rates for the year. So once you have all the numbers in place, calculate the employee turnover rate and be happy. Now these are for the quarter. They are asking us to find out for the year. So these are the number of employees, who are, retiring during the quarter or separating during the quarter. Find out what are the equivalent number of workers for the year and then recompute the formula. All right. C. Top Tech, a manufacturing company, is presently evaluating two possible machines for the manufacture of superior pen drives. The following information is available. So they have given us machine A and machine B. And in terms of particulars, the selling price per unit, the variable cost per unit, the total fixed cost per year. So if you go with machine A, you will have a selling price of 400, variable cost of 240. Your contribution, selling price minus variable cost, is going to be 160. For machine B, it is 400 minus 260. Contribution will be 140. But here for machine A, you have a higher total fixed cost lakhs. For machine B, it is 200 lakhs. Now, machine A capacity will be 8 lakh units. Machine B capacity will be 10 lakh units. Recommend which machine should be chosen. Should we choose machine A or should we choose machine B? Now, how do you decide whether to go for machine A or machine B? So basically for machine A, we have a 160 rupee contribution and we have totally 350 lakhs that we are going to incur. All right, in terms of fixed cost. So if I do 350 lakhs by 160, we get 2,18,750 as the break-even point, a point where we are going to recover all the fixed cost under machine A. And if we look at machine B, we are going to have 400 minus 260, that is 140, and 200 lakhs divided by 140. If we do, we get 1,40,000, 2,857 some change as the break-even point. Now the question is, shall we go for machine A or shall we go for machine B? See, if the capacity or if the number of units that we are expecting we will sell is higher, then it always makes sense to go for a machine which has a higher contribution. But if the volume anticipated is less, then go for a machine which has, a lower capacity or a lower fixed cost. So if we were to find out what is the indifference point between the two, see, for machine A, we are going to get 160 rupees as contribution. For machine B, we are going to get 140 rupees as contribution. So by employing or by deploying or by selecting machine A, we will get 20 rupees extra contribution per unit. But for getting this extra contribution of 20 rupees, we have to spend 150 lakhs extra in terms of fixed cost per year. So if I look at the incrementals, 150 lakhs divided by 20 rupees extra. So the indifference point is 7.5 lakh. If you are able to make 7.5 lakh units and sell, and if the demand is above that, then machine A is better. Otherwise, machine B is better. But also one more thing that you need to keep in mind, see here the capacity is only 8 lakhs. So you will be restricted once you are doing, more than 7.5 lakh, but you can get this benefit only up to 8 lakh. Beyond that, if you have to do, then you have no option but to go for machine B. So these are the basics in place. Let's look at the requirement. An other way of looking at it, see, assume that there is unlimited demand for this, product. Then if there is unlimited demand, how much maximum can we produce for machine A? We can make 8 lakh units. So if we were to contribute or if you were to calculate the maximum profit, we would say 160 rupees contribution into 8 lakh units. That is 1280 lakhs minus 350 lakhs of fixed cost. Maximum profit will be 930 lakhs under machine A. For machine B, it will be 140 units into 10 lakhs. That will be 1400 lakhs of contribution minus 200 lakhs, we will get 1200 lakhs of profitability. So if we look at unlimited demand and if we look at whether to go for machine A or to go for machine B, for machine A we can make maximum 8 lakh units, earn 930 lakhs. For machine B we can make maximum 10 lakh units, earn 1400 minus 200, 1200 lakhs. So machine B would be recommended. Now, would your answer change if you are informed that in near future demand will be unlimited? Wonderful. And the capabilities of the two machines are as follows. So machine A 12 lakh units, machine B 12 lakh units. See, what did we discuss? We just discussed that between the two machines, if we are expecting to sell more than 7.5 lakh units, then machine A is going to be better. But then there was a restriction that the capacity of machine A was 8 lakhs. Now here, the capacity of both the machines are 12 lakhs. Now if the demand is unlimited and we are able to make more than 7.5 lakhs, then which one will you prefer? We will obviously prefer machine A. If you are not able to, think from that angle, not to worry. Just go back to your basics and say, okay, 160 rupees contribution from machine A, all right, versus into 12 lakh units that we are going to make. So we will get a total contribution of 1920 lakhs minus 350 lakhs of fixed cost. 1570 will be my maximum profitability. For machine B, it will be 140 into 12 lakhs. So that will be 1680 minus 200. It will be 1480 lakhs of profitability. So machine A apparently is going to be better. So that is how we'll have to approach. Next, with D for 5 marks. Coal is transported from two mines, X and Y, and unloaded at plots in a railway station. X is at a distance of 15 kilometers and Y is at a distance of 20 kilometers from the railhead plots. So they have given the distance. A fleet of lorries carrying capacity of 4 tons is used to transport coal from the mines. So the capacity is 4 tons. Records reveal that the average speed of lorries is rupees 40 per hour when running and regularly takes 15 minutes to unload at the railhead. At mine X, the average loading time is 30 minutes per load. While at mine Y, the average loading time is 25 per load. So basically, if we look at it from the information that they have given us, they are saying there are two mines, mine X, mine Y. From mine X, the distance to the railway plot is 15 kilometers. From Y, it is 20. Now, this is a one-way distance. So for all our calculations, we'll have to multiply and calculate the two-way distance, because one side it has to come with load and then it has to go back empty. Then they are saying the carrying capacity is 4 tons. So the tons that you can carry is only 4 per load per trip. Then the average speed they have given it. The average speed at which the lorries travel is 40 kilometers per hour. So if we take, for example, mine X, all right. So it is at a distance of 15 kilometers. In 60 minutes, we are able to do 40 kilometers. That means we are able to do 1.5 kilometers per minute. So if we have to cover 15 into 2 ways, 30 kilometers, and if we divide it by 1.5 kilometers per minute, we will require 20 minutes of travel time. All right. Then 20 minutes of travel time plus, all right, I think we have done some basic mistakes. So X is at a distance of 15 kilometers and the average speed is 40 kilometers per hour. All right. So we are going to take 1.5 minute per kilometer. So if we have to travel 15 kilometers into 2 ways into 1.5, we will be requiring totally 45 minutes. Instead of multiplying by mistake, we have divided. So we correct that. So mine X is going to take 45 minutes to travel plus 15 minutes of unloading time plus 30 minutes of loading time. So totally 90 minutes is what it will be requiring. Likewise, we can calculate for mine Y also. So that is the basic working that you will have to do. Now let's look at the additional information. So driver wages, depreciation and insurance is rupees 12 per hour. So 90 minutes is 1.5 hours. Based on that, you will have to calculate for if the total time is 90 minutes. Operated fuel, oil, tires, repairs and maintenance etc. is 1.6 per kilometer. In case of mine X, we will be traveling for 30 kilometers. You are required to prepare a statement showing cost per ton kilometer. Now, how many ton kilometers are going to get operated? That also working we have to do. See, there is a difference between kilometers and ton kilometers. Kilometers is the total distance traveled, whereas ton kilometers is the distance that we are going to travel while carrying the load. So in case of mine X, we will have a distance of 15 kilometers and 4 tons are being traveled. So 15 into 4, we have 60 ton kilometers in case of pickup from mine X. In case of, pickup from mine Y, we will have 20 kilometers into 4 tons. So 80 ton kilometers. So whatever total cost we get for X, that we have to divide by 60 ton kilometers to get cost per ton kilometer. For y, we'll have to divide it by 80 to get cost per ton kilometer. So very simple, you'll have to, just find out the distance, find out the time, arrive at the total cost divided by the ton kilometers and calculate what is the cost per ton from each mine. So these were the 5-mark compulsory questions. How would I rate it? Bit A is simple, straightforward. Same would be my assessment for bit B. Bit C, I would say concept is not very new, but it requires some amount of understanding and definitely application of high level of application of concept. Again, bit D, I would say it is very simple and straightforward. Then let's look at question 2A. In a manufacturing company, the overhead is recovered as follows. Factory overhead, a fixed percentage based on direct wages. Now they have only mentioned that it is a fixed percentage, but they have not given us the percentage. Likewise, admin overheads, a fixed percentage basis on factory cost. What is factory cost? Prime cost plus factory overheads will give us factory cost. The company has furnished the following data relating to the 2 jobs undertaken by it during the period. So job 1, job 2, direct material, direct wages, selling price, and then profit percentage on total cost. So they have completely remained silent about the factory overheads and the administrative overheads, both in terms of rupees and in terms of percentage. Only thing that they have mentioned is that it is, as a fixed percentage of direct wages and of factory cost. Now, you are required to compute percentage recovery rates of factory overheads and admin overheads. So basically, find out the missing number. Now, how are we going to do that? We have no other option but to use algebra. So we will say, let the percentage of factory overheads on direct wages be X, and let the percentage of admin overheads on total factory cost be Y. So we use that, and then we will have to solve for X and Y. Now, how are we going to solve for X and Y? We are going to have one equation for job 1, and we will have one equation for job 2. Then we will have to simultaneously solve for those 2 equations. Now, only one thing that I can mention here as a hint is that they have given us a selling price. For example, in job 1 of 3,33,312, and they have said percentage of profit on total cost is 12%. So if total cost is 100, add 12 to it, your selling price will be 112. So this 3,33,312 represents 112. And if you divide it by 112, multiply it by 100, you get the total cost as 2,97,600. So what we need to do is we need to first find out the prime cost. What is prime cost? 1,08,000 plus 84,000, which is 1,92,000 in case of job 1. Then to this prime cost, we will have to add the factory overhead. How do we add the factory overhead? We said let X be the percentage of recovery that we are going to do on direct wages. So it will be 84,000 into X. So 1,92,000 prime cost, which is basically the total of these 2 items, plus 84,000 X. This will become our factory cost. Then this 1,92,000 plus 84,000 X, we further, add the administration overhead by multiplying it with Y, because we have assumed Y to be the percentage. So likewise, we'll have to do job 2, equate both of them, and then find out for X and Y. So basically, the percentage of direct wages will come to 66.67%, and percentage of administrative expenses on factory cost will come to 20%. You can solve that and cross verify. So that is how we will have to look at bit 1. Then once we know that, they are asking us to calculate the amount of factory overheads, administrative overheads, and the profit for each of the 2 jobs individually. So profit can be directly computed because they have given the percentage and the sales price. based on the percentages 66.67 and 20 that we will find out eventually, you have to multiply and find out what is the factory overhead and what is the admin overhead. So this also is going to be a simple, straightforward point. Then, using the above recovery rates, determine the selling price to be quoted for job 3. Additional data pertaining to job 3 is as follows. So they have given us direct material 68,750, direct wages 22,500. So we will get some prime cost. We will add factory overheads, which will be 66.67% of direct wages 22,500. We will get the total factory cost. We will add 20% to that, arrive at the total cost, and then they want profit percentage on selling price to be 15. So we add for profit markup, arrive at the total selling price to be charged. So I don't see any complication in this question other than being a little methodical and little careful while doing the algebra part of the question. Next. Again, this is a question which is from contract costing and based on escalation, which we have covered in our class, and it is typically picked up from your institute's material, but there is a slight modification. They have changed the numbers here and there in order to come up with the computation. All right, let's read the question. Paramount Construction Limited is engaged in construction and erection of bridges under long-term contract. It has entered into a big contract at an agreed price of 250 lakhs. Subject to an escalation clause for material and labor as spelled out in the contract. What do you mean by escalation clause? Escalation clause says if there is an increase in price, then at price of raw materials or labor or whatever are the agreed items, whatever is the escalation, we are going to pay for that also. So we will compute what is the total cost, or we will identify what is the total cost at the time of entering into the contract, compare it with actuals, what is the increase or decrease in price. If there is net incremental addition on account of escalation, see, it is only on account of price escalation. It is not on account of increase of raw quantity that you have consumed or decrease of quantity that you have consumed, or you were supposed to take 100 hours of labor, but you have taken 200 hours of labor. So all of that is not going to get covered under escalation clause. Escalation clause will cover only your price change. So that we need to take into account. So corresponding actuals and standards are follows. So in the contract, what they have spelled out is the rate per ton for these materials are going to be 1500 for P, 900 for Q, 4500 for R, and 32,500 for S. Whereas the actuals were 1750. See, there was a increase in price. So this we need to factor in. For Q, there was a reduction in price. That also we need to factor in. See, no contract is going to give you only increase in price. If there is a decrease in price of some raw material and if you are claiming escalation, all of that will be taken into consideration. For R also there was a reduction. For S, there was an increase. So basically for each line item, we'll have to do escalation. If we were to do for P, we will say, look, rate was 1500 as per the contract. Now the rate is 1750. So 1750 minus 1500, there is a 250 rupees increase per ton into, shall we take 2800 tons or shall we take 3000 tons? Sir, actual quantity, actual hours has nothing to do with your escalation clause. Take what has been agreed in the contract. So into 2800. So 7 lakh rupee will be the escalation benefit in terms of product material P. But for Q, there is a 100 rupee reduction. So 100 into 3100, that 3,10,000 we will have to reduce. Likewise for R, 150 rupees per ton into 800, 1,20,000 we will have to reduce. And for S, 34,200 minus 32,500, 1,700 is the increase. So 1,700 into 150, we will get escalation benefit. So like that, we will have to calculate. Likewise for labor also, LM, there is a 10 rupee increase. So 10 into 65,000. For LN, there is a 5 rupees increase. So 5 into 46,000. We'll have to add up all the escalations and arrive at the total number. What is the requirement? Required, prepare a statement showing admissible additional claim of material and labor due to escalation clause. So if I was to, just compute the labor number and tell you upfront, it is 10 rupees into 65,000, 6 lakhs 50 for LM, plus, or rather minus 1000 rupee, plus 5 rupees, because 45 to 55 rupees increase into 46,000, that is 2 lakh 30. If we add up both, we get a 8 lakh 80 escalation increase for labor. Likewise, you find out for material, give them the total, what it is for both of them put together. Determine the final price payable after admissible escalation claim. So take the 250 lakhs, add whatever escalation we have computed in bit 1, you will get the total number. So it is an easy 5-mark question. Next, 2C, distinguish between job costing, process costing. Any 5 points of differences. A simple theory question based on job costing and process costing for 5 marks. So you need to relate back to your theory, and they are not asking all the differences. Give just 5 relevant points. Job costing, when do we use? We use it when we are trying to do costing for a particular job. Process costing, when do we do? We do when the material or when the production passes through 2 or 3 different processes, and we need to identify cost at each stage or after each process. And if we have some interdepartmental profit related calculations to do, we are going to do that. So you identify such 5 points and give the 5 points. You give 5 correct points and take away 5 points. Next, question 3A. SR Limited is a manufacturer of garments. For the first 3 months of financial year 22-23, commencing on 1st April 22, production will be constrained by direct labor. So they are saying for the first 3 months, labor shortage will be there. It is estimated only 12,000 hours of direct labors will be available in each month. So whatever production you want to carry out, you need to plan, keeping in mind that there are only 12,000 hours of direct labor available. For market reasons, production of either of the 2 garments must be at least 25% of production of other. See, if there is a limiting factor, so if I say that labor is the limiting factor, and you have 2 products, product A and product B, which one of the 2 products will you manufacture with the limited labor? Sir, we can manufacture A or B. Wrong answer. You will manufacture A or B, whichever is giving you maximum profit by using the labor hours. So whichever product is giving us the highest profit, or in terms of contribution, I say highest contribution per labor hour, we will select that product to manufacture, because the objective of business is profit maximization. But here they are putting in a very interesting condition. So this question is not something that we have done previously, but then it is a very logical question. And it's a very interesting twist that they have given in the question. They are saying, for market reasons, production of either of the 2 garments must be at least 25% production of the other. So we have shirts, we have shorts. If you decide to make 1,000 shirts, minimum 250 shorts you have to do. Likewise, if you decide to make 1,000 shorts, minimum 250 shirts you have to do. So that is what this sentence is meaning to say. For market reasons, production of either of the 2 garments must be at least 25% of the production of other. So now we have 2 things in hand. One, we have the 12,000 limited hours. We need to figure out whether we can, how we can make the best use of this 12,000 hours. Whether making shirts is going to be more profitable with the limited labor, or shorts is going to be more profitable. After you have found out that, find out the number of units such that minimum 25% of the other product you are doing, whichever you don't want to. All right. So let's kind of break this question further a little bit. So they have given us estimated cost and revenue per garment as follows. So sales price, raw material fabric at rupees 12 per meter, dyes and cottons direct labor at 8 per hour. Now shirt, they are saying the direct labor cost is 8 rupees and the per hour cost is also 8. That means how much time we are going to require of labor for each shirt? It is 1 hour. For short, it is half an hour. So we use one labor hour, make one shirt, or use one labor hour, make two shorts. Which one are you going to prefer? Let's evaluate. Fixed overhead at rupees 4 per hour. See, whether you make shirt or you make labor, it is only the absorption. The fixed overhead is not going to change. It is going to remain constant. So for decision making, fixed overhead is not going to be relevant as far as our decision is concerned. So if we are to calculate the contribution for shirts, it is 60 sales price minus 24 minus 6 minus 8, the raw material and direct labor cost. We get 22 rupees as contribution per unit of shirt. All right, 22 rupees per unit of shirt. In terms of short, it is 44 minus 12 minus 4 minus 4 direct labor, 24 rupees. All right. So it is 22 per unit and 24 per unit. But that is not, what is relevant. What is relevant is this shirt takes 1 hour. So we can say 22 rupees generated by using 1 hour of labor versus in 1 hour, how many shorts we can make? We can make 2 shorts. So we will say 24 into 2, basically 48 rupees is the contribution that we can get from 1 unit or from 1 hour of short. So between shirts and shorts, we will prefer shorts. So that much clarity we have. But now we have to find out the number of units. So we will say, let X be the number of shorts that we are going to make, because that is our preferred choice. And if X is the number of shorts, automatically how many shirts we have to make minimum? 25% of X. So 0.25 X. So those are the number of shirts and shorts that we are going to make. Now we need to find out this missing number X. Now, if I make X number of shorts, how many labor hours I require? X by 2. Why X by 2? Because in 1 hour, we can make 2 shorts. If I have to make X number of shorts, how much time we require? X by 2. So we will say 0.5X is the time for shorts plus 0.25X is the time that we are going to take for shirts. So 0.75X is going to be equal to 12,000 hours. 12,000 divided by 0.75, 16,000 shorts we will be making, and 25% of that, 4,000 shirts we will be making. If you have to reconcile, so 16,000 into 0.5, 8,000 hours of labor will be required for shorts and 4,000 hours will be required for shirts. So that calculation you will have to do. Next, for the month of July 2022, direct labor will no longer be a constraint. So you manufacture as many shirts as you want, as many shorts as you want. Whatever you can sell, you manufacture. The company expects to be able to sell 15,000 shirts and 20,000 shorts in July 22. There will be no opening stock at the beginning of July 22. Wonderful. Then they are saying sales volumes are expected to grow at 10% per month cumulatively thereafter throughout the year. So whatever you are selling in July, plus 10% you will be selling in August, plus 10% you will be selling in September, plus 10% in October, so on and so forth till the end of the year. So sales volume are expected to grow at 10% per month cumulatively thereafter. Following additional information is available. The company intends to carry stock of finished garments sufficient to meet 40% of next month's sale from July 22 onwards. See, at the beginning of July, we have no opening stock. In July, for example, we are expecting to sell 15,000 shirts. So those 15,000 we have to manufacture. Plus what they are saying is, you maintain sufficient stock to meet 40% of next month's demand. So 15,000 plus 10%, that is 16,500 will be the next month's demand, into 40%, 6,600. 40% of next month's demand also you manufacture. So how many we are going to manufacture in July? 6,600 for next month plus 15,000. 21,600 shirts we have to manufacture for July. Likewise, we'll have to calculate for shorts, and we'll have to do this computation monthly. The estimated selling price will be same as above. Now let's look at the requirements. Calculate the number of shirts and shorts to be produced per month in the first quarter of financial year 2023 to maximize company's profit. So this is what we have discussed. We will be making 16,000 shorts, 4,000 shirts. So, definitely this is a pattern of question which is new, not in terms of concept, but in terms of computation. So little application of mind and concept is required, and I would rate the difficulty of this question as high. Also, it is, I must admit, a little time consuming because of the requirement number 2. In the requirement number 2, they are saying prepare following budgets on a monthly basis for July, August and September 22. So you will have to, forecast sales 15,000 for July shirts, 16,500 for August, and 16,500 plus 10%, 18,150 for September. 40% of that you need to maintain as closing stock. So opening plus sales during the month, or rather sales plus closing stock minus opening, that must be the number of units that you have to budget in terms of production. So they are basically asking us here to prepare a sales budget showing the sales unit and sales revenue for each product. Wonderful. So it is not complicated in terms of concept, but it is a little time consuming. They are asking us to prepare the production budget in units for each product for the 3 months. All right. Then let's look at the next question. The following data are available from the books and records of A Limited for the month of April 22. This is a 10-mark question. Stock of raw material as on 1st April 22, 10,000. Raw material purchased 2,80,000. Manufacturing wages 70,000. Depreciation on plant 15,000. Expenses for quality control checks 4,000. Lease rent of production assets 10,000. Administrative overheads relating to production 15,000. Expenses paid for pollution control and engineering maintenance 1,000. Stock of raw material as on 30th April 40,000. Primary packing cost, research and development process related cost, packing cost for redistribution of finished goods, and then administrative expenses. So they have given us a list of items. Let's read further. Stock of finished goods as on 1st April 2022 was 200 units, having a total cost of 28,000. So in the table, they have given us WIP. Here they are giving us stock of, in the table they had given us raw material, not WIP. Here they are giving us finished goods. The entire opening stock of finished goods has been sold during the month. Production during the month of April was 3,000 units. Closing stock of finished goods as on 30th April was 400 units. So probably you have the opening stock 200. Plus you have produced 3,000 during the month and closing is 400. That means balancing figure 2,800 units you have sold. Let's look at the requirement. You are required to prepare a cost sheet. Now this is a very simple question which is involving preparing of cost sheet. There are no twist items or there are no difficult catch points in terms of information given in the question. So they want us to find out the cost of raw material consumed. Basically opening plus purchases minus the closing. Prime cost, material cost plus wages. Factory cost, cost of production, cost of goods sold and cost of sales. So simple straightforward cost sheet question, I think, which we have sufficiently covered and we should be able to answer. Then second, calculate the selling price per unit if the sale is made at a profit of 20% on sales. Once you know cost of sales, at 20% profit markup, you will get the selling price per unit. So you will get the total sales value divided by the number of units sold, 2,800. You will get the selling price per unit. So I don't perceive any complications that are there in that question. Let's look at next 4A. STG Limited is a manufacturer of chemical GK, which is required for industrial use. The complete production operation requires two processes. So this chemical has to go through the two processes. The raw material first passes through process 1, where chemical G is produced. The following data is furnished for the month of April 22. So they have given us a table, particulars and kgs. Opening WIP quantity 9,500. Where is this question hinting? This question is hinting towards calculation of equivalent units of production, because the moment you have process account and we have some WIP, we will have to for sure calculate equivalent number of units. Also, we have to be careful and we have to identify whether the question is asking us to follow the FIFO method or weighted average method. I hope that weighted average is given because it's a simpler calculation and easy to do. So material 100% complete, conversion, that means labor and overheads is 50% complete. Material input quantity 1,05,000, work completed quantity 83,000, closing work in progress quantity 16,500. In terms of material 100%, in terms of conversion 60% complete. You are further provided that, so they have given us the opening WIP cost in terms of material cost 29,500, in terms of processing cost 14,750, the input cost of material during the month and the processing cost incurred during the month. Normal losses may be estimated to be 10% of material input. How much is the material input? 1,05,000. So 10% is 10,500. It has no realizable value. Any loss over and above normal loss is considered 100% complete in material and processing. Let's identify if there is any loss. So 9,500 opening plus 1,05,000 we have introduced. So total input becomes 1,14,500 minus. Now see, here is a catch point and an assumption. In terms of normal loss, there are questions in your study material which says it is 10% or 5% or 8%, whatever may be the percentage of total material, including the opening WIP. But here they have simply used the term 10% of material input. So I am assuming you also should write the assumption in the question whether you are taking material input to be inclusive of opening WIP or excluding. I am for a moment just considering it only material input because they have specifically not mentioned anything in terms of opening, and anyways it was 100% complete in the previous period. So it would be kind of reasonable and fair to assume that it is of the input quantity. All right. So 1,14,500 minus 10,500, which is the normal loss, minus 83,000 completed, minus 16,500, which is the closing. So we have 4,500 units of abnormal loss, which we have to take into consideration. Next, the company transferred 60,000 kgs of output chemical G from process 1 to process 2. How much of work was completed? The work completed was 83,000 kgs, but they are saying they have transferred only 60,000. Wonderful, no problem. Balance 23 must be left over, or they must have done something with it. What they have transferred is only 60,000, we will take 60,000. Further materials are added in process 2, which yield 1.2 kg of chemical GK for every kg of G introduced. So if 60,000 kgs are introduced, your yield is 1.2. So we get 72,000 kgs of output of chemical GK. The chemicals transferred to process 2 for further processing are then sold as chemical GK for rupees 10 per kg. Any quantity of output completed in process 1 are sold as chemical G at rupees 9 per kg. The monthly cost incurred in process 2 other than the cost of chemical G are as follows. So input 60,000 kgs of chemical G, material cost 85,000, processing cost 50,000. So these are the details of process 1 and process 2. Let's look at the requirements. Prepare statement of equivalent production and determine the cost per kg of G using the weighted average cost method. So you prepare a equivalent unit production calculation, add up all the cost, find out unit. Next, prepare a statement showing cost of chemical G transferred to process 2. So out of 83, we have transferred only 60,000. So whatever cost per kg we get, multiply it only with 60,000 kgs. You will get the cost of chemical G transferred to process 2, cost of abnormal loss, multiply with 4,500, and balance, which is left over. So 83 is produced minus 60,000 is transferred. So 23,000 will be the closing work in, cost of closing work in progress. So that closing work in progress, we'll have to calculate based on the equivalent units that is remaining, so that you can do no complications involved. These are concepts which we have sufficiently covered in our classes. Third, STG is considering the option to sell 60,000 kg of chemical G of process 1 without processing it further in process 2. Will it be beneficial for the company over the current pattern of processing? So whether to further process or not. See, basically, if I sell chemical G as it is without processing, I get 9 per kg. If we further process and sell, we are going to get rupees 10 per kg. That means we are getting 1 rupee additional. All right. So 60,000 kgs into 1 rupee, 60,000 is going to be the additional revenue by further processing. Is that right? That is not right. It is wrong. Why? Because there is a yield also involved. So if we process chemical G further, we get 60,000 into 1.2. So 70,000 units into 10 rupees. 7,20,000 is the revenue of further processing, and 60,000 into 9. 5,40,000 is the revenue without further processing. So 7,20,000 minus 5,40,000, 1,80,000 is the incremental revenue. Against this incremental revenue, we have an incremental cost of 85,000 and 50,000. So incremental cost will be 85 plus 50, which is 135. We will still be left over with a 45,000 incremental profit. Therefore, we should further process it. Here, students will fall in the trap. Very beautifully laid down trap. What is that trap? They will, take 60,000 kgs into 10, 60,000 kgs into 9, 1 rupee additional. So we are going to get only 60,000 incremental revenue, but we have to spend 85,000 and 50,000. Cost is more than incremental revenue. We should not further process. Students will have a tendency to miss out the concept of yield. So keep that in mind and then do the calculation. Your answer will be a little different. So that is the catch point. Next, UV Limited started a manufacturing unit from 1st October 21. It produces designer lamps and sells it at 450 per unit. During the quarter ended, it produced and sold 12,000 units and suffered a loss of 35 per unit. During the quarter ended 31st March 22, it produced and sold 30,000 units and earned a profit of 40 per unit. You are required to calculate total fixed cost incurred by UV Limited per quarter, the break-even sales value in rupees, and profit if the sales volume reaches 50,000 units in the quarter, in the next quarter. So how are you going to crack this question? It's a 5-mark question. It's based on a simple concept that any increase in the level of activity will result in an increased contribution, increased variable cost, and increased profit, because the only thing that is going to remain constant is the fixed cost. So what will not change based on your level of activity is fixed cost. So let us put it this way. In the first quarter, we have a loss of 35 per unit on 12,000 units. So 12,000 into 35, we have a total 4.2 lakh loss. Okay, 4,20,000 loss in first quarter. In the next quarter, we have 30,000 into 40, 12 lakhs profit. So from minus 4,20,000, it has gone to plus 12 lakh. How much is the differential? Can I say 4,20,000 plus 12 lakh? Because from minus it has gone to positive. So 16,20,000 is the total increase in profit. Now increase in profit is equal to increase in contribution because there is no change in fixed cost. So by increasing 18,000 units, our profit has increased by 16 lakh 20. So 16 lakh 20 by 18,000 will give us rupees per unit. That means the contribution per unit is 90. Once you have this in place, you take any quarter, find out the fixed cost. For example, in the quarter ending 31st March 22, we have 30,000 units into 90 rupees contribution. That is 27 lakhs. But our profit is only 12 lakhs. So if I deduct fixed cost, if I deduct the profit from contribution, we get a fixed cost of 15 lakhs. So that is how we need to compute. And once we have 15 lakhs as fixed cost divided by 90 rupees per unit, you get the break-even point as 16,666.67 in terms of units. Multiply it by 450 rupees. You will get 75 or you'll get 75 lakhs as the break-even sales in units. Then they want us to calculate profit if the volume reaches 50,000. So basically 50,000 into 90 rupees is the contribution. 45 lakhs is going to be your total, contribution minus fixed cost of 15 lakhs. 30 lakhs will be your profit. So that is how you need to compute. Next, very interesting question. Journalize the following transactions, assuming the cost and financial accounts are integrated. So this question is based on integrated accounting. What is the difference between non-integrated and integrated? Sir, in non-integrated, we don't maintain the financial ledgers. So if we are purchasing material, we will debit the raw material control, we will credit the common account, the stores ledger control account in case of a non-integrated system, but in case of integrated system, it will be directly the vendor. So keep that in mind. They are talking about integrated accounts. So based on that, we need to pass the journal entry. So they have given us 5 transactions, 1 mark for each. Direct material issued to production. So it will be WIP control account to raw material control account. Allocation of wages, allocation. All right. So it is going to go from, indirect wages to the WIP. So we will debit WIP control account, credit wage control account. Then factory overheads over absorbed. See, when we say over absorbed, it is going to have a credit balance. So this factory overheads over absorbed, we have to transfer it to the costing P&L. So factory overheads, it is having a credit balance, we need to debit it. So factory overheads debit to costing P&L credit. Administrative overheads under absorbed, it is going to have a debit balance. So we have to transfer it to costing P&L. Costing P&L debit to admin overhead control account credit. Deficiency found in stock of raw material. It is a normal loss again. So this normal loss, we will transfer it to the WIP control account. Normal loss has to be absorbed by good unit. So WIP control account to raw material account. So these are the entries that we'll have to pass. See, this integrated, non-integrated was just a confusion. Why? They have not given any financial transactions only. Wonderful. So there is no question of, difference between the two entries. Next question. Star Limited manufactures 3 products using the same production methods. A conventional product costing system is being used currently. Details of 3 products of a typical period are given. So they have given us, labor hours per unit for 3 products, machine hours per unit, materials per unit, and volume. Then they have given us the direct labor cost of rupees 20 per hour and production overheads are absorbed on a machine hour basis. The overhead absorption rate is rupees 30 per hour. Management is considering using activity-based costing system. Further analysis shows that the production overhead can be divided as follows. So they have identified 1, 2, 3, 4 activities and they have given us the proportion. The following activity volumes were associated with the product line for the period as a whole. So for the 3 products, they have given us number of setups, number of movements, number of inspections. What is the requirement? Calculate the cost per unit using the conventional method. So basic absorption costing We have sufficiently covered n number of problems based on this concept. So you find out what is the cost per unit. Then we have to calculate based on activity based costing method. See, I would rate this question as simple and easy. What we need to do? One, we need to find out what is the total cost under conventional system. They have given us what is the labor hours requirement per unit. They have given us the labor rate. So we can find out the labor cost. They have given us the machine hours required per unit, and they have given us the absorption rate per machine hour. So we can find out how much is the absorption that we are going to do for each product, and if we add up, we get the total production rates. Material cost also they have given directly. So basically, material cost plus the labor cost, we will get the prime cost. To that, we are going to add absorption for material, absorption for machine, hours cost based on rupees 30 per hour. We get the total cost divided by the number of units. You get cost per unit and requirement of bit 1. Then whatever total you get of absorption, that we need to bifurcate between these activities, calculate activity cost pool, calculate activity cost drivers and rate of recovery per activity, and then prepare the activity distribution schedule. So this is a simple question. I don't see any complications in that. Next, a manufacturing department of a company has employed 120 workers. The standard output of product NPX is 20 units per hour, and the standard wage is 25 per labor hour. So they have given us what is the standard time required for each unit and what is the standard wage. In a 48-hour week, the department produced 1,000 units of NPX, despite 5% of the time being lost due to abnormal reasons. The hourly wages were paid at rupees 27 per hour. Calculate, very simple, straightforward question. Labor cost variance, rate variance, efficiency variance, and idle time variance. Simple cost question based on standard costing, no complications. Let's go to the next question. RST Limited produces 3 joint products X, Y, and Z. The products are processed further. Pre-separation cost are apportioned on the basis of weight of each output of joint product. So calculate what is the weightage of each product. Based on that, you spread the pre-separation cost. That is the method being followed. The following data is provided for the month of April 22. Cost incurred up to the separation point. So the common joint cost is 10,000. Output in liters, 100, 70, and 80. So 10:7:8 is the proportion that we will use to kind of distribute that cost. Cost incurred after the separation point for the 3 products are given. They have given a selling price per liter after further processing, before further processing at the pre-separation point estimated. You are required to prepare a statement showing profit or loss made by each product after further processing using presently adopted method of apportionment of pre-separation cost. So take the revenue, take the pre-separation cost in 10:7:8 proportion, add the cost incurred after separation point, compare it with the sales revenue, find out the profitability. Simple question. Advise whether management on purely financial consideration should further process the 3 products or not. So this is the second question that has come based on further processing or not in the same examination set. Very simple. So we will say, okay, for product X, if we further process, we get 50. If we don't further process, we get 25 rupees. So 25 rupees extra we are going to get for 100 liters. So 2500 is the incremental revenue. 2000 is the incremental cost. 500 incremental benefit. Let's do it. For Y, 10 rupees extra for 70 liters. So 700 is going to be the incremental revenue. But to get that 700, we have to spend 1200. Will we further process? We will say it is not recommended. For product Z, 15 rupees extra. So 15 into 80 liters, 1200 rupees incremental against 800 rupees cost. 400 benefit we will get. We will say we are happy to do it. So that is how we will have to answer this question. So again, a simple question, no complications involved. And then the last question. It's a theory, bit. Explain the essential features of a good cost accounting system Cost accounting system should be reliable, it should be accurate, it should provide us, timely information. So all those features which are, listed out, we need to kind of mention here. And I would suggest you give 4 important points which are correct, relevant, and you're going to get your 4 marks. Don't go into essay writing. This is not a BCom examination. Second, write about the treatment of following items associated with purchase of material. Whether you're going to add it to the cost of purchase or not. Cash discount. Financial item, we will not add. IGST. If we are able to take credit, then don't add. If it is non-creditable, if we cannot get input, then you add. Demurrage. Anything which is abnormal in the nature of penalty, we will not add. Shortage. If it is normal loss, add. If it is abnormal, don't. Since they are using the term shortage, that means it is some kind of pilferage. Abnormal, let's not add. Basic custom duty. If we get input, don't add. If we cannot get input, we cannot get refund, add. So that is what we have to write. Explain the treatment of overtime premium in the following situations. So how are you going to deal with the OT premium? SV Limited wants to grab some special orders and overtime is required to meet the same. See, if you take the special order, you require OT. So this OT should be directly attributable to the special order. We are going to charge it to the special order. Department X has to work overtime to make up a shortfall in production due to some fault of management. Abnormal reason. Don't charge to cost of production. Take it directly to the costing P&L. S Limited has to work overtime regularly, not abnormal. If it is regular, add it to the regular cost. Consider it as a normal cost only. Due to flood in Orissa, it has to work overtime. Abnormal reason. Charge it to the costing P&L. A customer requested, specific request. Charge it to the customer. Alright, whatever overtime we are having to pay. So that is how we need to answer those bits. Discuss briefly some of the criticism which may be leveled against the standard costing system. So what are the drawbacks of standard costing system? We need to list out. So you need to read your theory also if you are able to answer these, if you are wanting to answer these questions. Identify the methods of costing from the following statements. Costs are directly charged to a group of products, batch costing. Nature of product is complex and cannot be ascertained. So do product that particular job output product costing. Cost is ascertained for a single product, single or output costing. All costs are directly charged to a specific job costing. Costs are charged to operations and averaged over units produced. So this will be, you can say batch costing or product output costing. So these are the, bits that are given. So this question I would, this entire question paper, I would rate it as average. I would not say it is very difficult. It is very lengthy. Yes, there are a couple of questions which are tricky. They are tricky in terms of, how to approach, but not tricky in terms of newness being involved in the question. Except for one question, question 4, where, that shirt and shorts computation was involved. Rest of it is very, kind of simple and straightforward. So all in all, if you are doing your concepts thoroughly, and if you are, kind of practicing whatever questions we are, doing in our classes, that would be more than sufficient to get a reasonably high score in the examination. So friends, with this, I complete my review and initial assessment of the question paper.